chartered accountant, I've set up dozens of Xero accounts for my property investor clients. In this video, I'm going to provide a full step-by-step guide about how you can set up your property business on Xero, from setting up your chart of accounts, connecting your bank account, reconciling transactions, and then on to purchasing property. Watch it now for a demonstration. Right, first off then, just to talk you through their case study. So I'm going to set up a property company on Xero. The case study is that it's going to be called 123 Property Limited. It's basically going to have one shareholder and director called Bill Smith. And there's going to be £10 of ordinary shares. And the company was incorporated or set up on the 31st of December 2024. So in the UK, this is going to mean that its first accounting period is going to run up until the 31st of December 2025. If, say, we'd set it up midway through December in 2024, in the UK, the accounting period would still end at the end of December 2025. I've just made it really simple, though, for the purposes of this scenario. So it's the 31st of December 24 means the first accounting period will run until the 31st of December 2025. So during the first year, then, this company has acquired two different properties, and we're going to go through all the process of accounting for those two transactions, the mortgages to purchase them, and also all the bookkeeping associated with a property company that has two properties within it. So properties are called Station Road and Cliff Road. And just to keep it nice and straightforward, I said they've been purchased for the same amount and they've had exactly the same cost associated with purchasing them, just to keep it nice and simple and straightforward. Okay, so what we'll do now is we're going to flick over to Xero and just talk through some of the options for setting up an account. Okay, so once you navigate to Xero, depending on what country you're going to access from, it's going to look a little bit different. But there's normally a free kind of trial which you can use, which is really handy. You can use Xero features for 30 years just to make sure whether you kind of like it and see whether it works for you. And then you can then start paying from then on. These are kind of the traditional packages. You've got the Ignite package, the Grow package, Comprehensive and Ultimate. So as you get towards Comprehensive and Ultimate, they have more advanced features, such as having like multi-currencies, for example. Traditionally, the most appropriate for a property business would be Ignite, and then moving on to Grow when you get over a certain size. But actually, Xero have recently brought out a new simple product, which is actually cheaper, and it's more appropriate for a property business in some ways because it's applicable for non-VAT businesses. So for property business, usually your VAT is not applicable. So this is perfect for you. So you can see this ordinarily costs £7 plus VAT per month, and you can get it for a discounted rate. And this is going to be really useful. The only limitation might be is if you need to send more than 10 invoices or quotes. Actually, in a lot of cases, if you're using a letting agent, you won't need to send any invoices. But if you are managing your properties yourself, you may use invoices actually as a good way to collect rent from your tenants. If you've got more than 10 properties, then you'd have to look at getting a different package. But for most landlords, I think this is the best way to go. So what's going to happen now is if you click Buy Now, it's then going to basically enable you to put all your details in, click confirmation. You'll then be taken through a process of having to confirm your email address. And then once you're all up and running, you have a page a bit like this, which we're going to start from now. So we're going to start putting our details in here. So we said we called 123 Property Limited. We can put the industry in here. It's not really particularly important as to which one that is. Put your country in. Last day of your financial year. So remember, going back to the scenario, I said our company was set up on the 31st of December 2024. So that means the end of our financial year is the 31st of December 2025. So we're going to put that in here. If we'd set up the company in the UK midway through December 2024, it's rounded up to the end of the month in 12 months' time. So say, for example, we set it up on the, what day are we on now? Yeah, the 18th of October 2025 as a set up this. So we set up our company on the 18th of October 2025. Our first financial year would run until the 31st of October 2026. That's in the UK. So let's go back to the example then. So we're talking the 31st of December. Do you have any employees? No, just me. That's probably going to be the case for most people. We're not registered for VAT. VAT is not applicable in this case for a property investment company. It says, what tool are you currently using to run? None, I'm just starting, but you can change that if needed. If you're using a different provider such as QuickBooks, it will probably then take you through a process to start converting your data from QuickBooks into Xero, but we're not going to do that in this case. You can either click Start Trial or Buy Now. So what we'll do is we'll do that now. We'll see if Start Trial works. Happy days. So we're in 123 Property Limited. Let's just give you a quick orientation of the Xero screens. So you can see everything is looking quite bare at the minute. That's because we've just set up the business or the account in Xero. But the first page you're going to be on is basically your dashboard. It's going to have details of all your bank accounts. Obviously, we haven't set up any bank accounts just yet. It would have any invoices owed to you, which in this case is unapplicable because you don't have any. To give you through bills you need to pay. It's going to have other items such as cash in and cash out, which again looks very empty at the minute. And you can set up an accounts watch list. So we can talk a bit later as to which accounts are useful to see on this, but we can do that in a bit more detail later. And then it's going to give you some more information. Basically, it's an overview screen which shows you kind of your key information that you'll need to see on a day-to-day basis. You'll then have different menu bars. So the home page is always going to bring you back to this. If you click into this one here, it's going to give you details of any other organizations you've got set up. It's going to take you to a demo company so you can kind of play around with that without causing any kind of potential damage to your actual working account. Details of subscription and billing, settings, etc. You've got a sales tab, which is where you kind of produce invoices and quotations. Yeah, for most property businesses, this may not be applicable, but if you are looking to set up invoices to send to your tenants to collect rent, this is how you would do it. And I've got a separate video which I can link in the description as to how you can go about doing that. Purchases is where there'll be details of any bills that you have to pay. And then reporting is where you're going to be able to show your balance sheet and your profit and loss. We're going to go into those for more information in more detail later, where we can set up bespoke reports. So profit and loss is basically going to show the income and expenses of the company, and the balance sheet shows what the company owns, so its assets, and what it owes, so its liabilities. And again, I'm going to set that up, a customized report later on, which you can use. Payroll is not going to be applicable in most cases unless you've got a payroll account and you're looking to pay people wages. Accounting is where you're going to have a lot of settings. It's actually quite limited in this case. We're going to need to change that later on so we can do things like manual journals, which is going to be important when we set up our companies. I'll show you how to do that later. Tax is if you're submitting VAT returns, which we're not. Contacts, basically every time you make a payment, it has to be linked to a contact. So details of all your contacts, which will include suppliers and customers, will go in here. It will be empty at the minute because we haven't set anything up. And then you've got a projects feature, which we will look at in another video, but it's not going to be applicable in this case. Okay, so that's just a quick overview of Xero, but the main page you're going to work from is the dashboard. The first thing we're going to do now is we're going to import a chart of accounts. So we're going to click on Accounting, Chart of Accounts. And this is basically what it shows now is the chart of accounts. So basically for every single type of expense or income, there is a accounting code for it. So what we start off with is the default Xero chart of accounts. It's great for a sort of a typical trading business, but it's not going to be what we need for a property investment company. So what I've done, and I've put a link in the description to this video, is I've created a customizable chart of accounts for a property investment company. Okay, this assumes that your company is a limited company and it uses accruals-based accounting rather than cash-based accounting, which some sole trader landlords may use. If somebody is interested in receiving a chart of accounts for a sole trader business, drop a comment in the in the video, and I'll see if I can put one together for you. I do actually have one which I could share quite easily, but my assumption is most of my clients or most of my viewers want to have a limited company one. But yeah, let me know if I've got this assumption wrong, and I can create one for a shareable one for sole trader landlords. But anyway, here we are. So we've got our default chart of accounts. It basically breaks it down into different categories. So you've got assets, which is things that the company owns. So later, this is where things such as your bank accounts and your property investments will go. At the minute, as I say, it's a default chart of accounts, so we'll have to change that shortly. Liabilities. This shows all the different accounting codes associated with things that the company owes. So all of our mortgages will go in here shortly. Equity. This includes items such as share capital and retained earnings of the business. Retained earnings are basically profits which are then carried forward and can be distributed out of the company via dividends. You've got all your expenses. So expenses are items that the company spends money on to run its business. And then you've got revenue. This is items such as sales. So this is where a company makes money. So what the first thing we're going to do now is we're going to basically import a chart of accounts. And as I said, I've got a link in the video where you can import a chart of accounts for property investment companies. So we're going to do that from once you've got that file, you can import it here. So from here then, basically select the file that you've downloaded, which I've shared with you, or a different one if you have a different one to use. Then I'm going to click import. It will take us to a page which looks like this. We're going to click confirm. Okay, once we're in here then, it's a customizable chart of accounts which we've imported, so we need to make a few amendments. So the first thing we need to do then is we're going to go through and just edit any of the account codes which need to be amended. So we can just do it from this main page, or we can go into each of the sections. So you'll be able to see as we scroll down some of the kind of ones which need to be amended. So first line, let's see, it's got details of your investment property. So I've just kept it kind of one that you can edit. So it says insert first line of your property address, investment property 1. So what we'll do in here is we'll click in this and edit it. So as you basically buy your properties, you can basically amend this and put in their details. So let's put how I do it. I just put the first line of address for each of my properties in here, just so it's nice and easy to track. So as we said, it was Station Road. Let's put that information in here. We can get rid of the 1. Then click save. See, now it's called Station Road Investment Property. Got the same for the second property. So this is another asset accounting code. So we can change that to the second address, which is Cliff Road Investment Property. We'll get rid of the 2. And a second space there. Click save. We're going to leave the rest of the investment properties blank for now, but they're kind of placeholders that when we go to buy new properties, we can add details in there. I'm going to keep scrolling down. So we've got director's loan account. So I just use, if you've got one, noting this example, we've got one director, so there's one director's loan account for that person. If there's 2, then there's a second one there. So let's put this person's details in here. So we said it was Bill Smith. And with director's loan accounts, I do have a more detailed video about director's loan accounts, but basically I use one accounting code for that director's loan account. That makes it really easy to kind of to monitor it over time. So basically any money that Bill Smith as a director pays into the company is treated as a director's loans. The company owes Bill that money back, and equally any money that Bill takes out of the company, which isn't a salary or a dividend, is withdrawn from that director's loan account. So all these transactions need to go under this accounting code. So once we've got that set up, we're going to click save. And the only one we need to do now is just the mortgages. So for every mortgage, I've got a liability accounting code for it, and we'll just edit those now. So the first one we said was Station Road. Click save. And then the second one was Cliff Road. So let's put that in there now. we've got some placeholders there for further mortgages as we set them up, but we don't need those right now. We've just shown you some of the kind of expenses that I put in here. So if you go into revenue, you see it said kind of sales. Now it says rents receivable, which is more applicable to a property investment company. We've also got revaluation of properties. So when we look to revalue them, it's got a specific accounting code for that. Go to expenses. I've basically used the kind of traditional expenses that I kind of experienced as running my own property investment company through Xero, but also managing my clients' Xero account as well. So you've got marketing and advertising, bank charges, subscriptions. So things, for example, such as software that you sign up for on a kind of monthly recurring basis would go in here. Utility costs. So when you're spending money on utility bills, if you've got a void, that would be this accounting code. Furnishing costs, if you're, say, for example, leasing furniture, would go in here. If it's I've got a different accounting code for if it's furniture which you purchase, which needs to go onto the balance sheet. You've got letting professional fees, so when you're spending money on your agents. Council tax, so again, when you've got voids, there's an accounting code for a council tax going there. Service charges and factor fees, so if you're letting out flats, apartments, ICO, so the Information Commissioner's Office, that's the kind of regular expense you're going to have, so it's got its own accounting code. Insurance, accountancy fees, sundry goes for other things that don't necessarily don't neatly fit into anything else. Telephone and Wi-Fi, that's just to name a few of the accounting codes which are got in here. So basically it should be everything you need to get started, but the good thing about Xero is if you don't have something you need, you can just click add account, you can add details of what it is. As long as there's a free code within Xero, you can create a new account. So it's really straightforward to do, and so you can make it customizable to suit your needs. And again, if any of the ones I've put in here as default don't work for you, you can amend them as well. So just click in one, change the name of it, change some of the information as required. But okay, what we've done now is we've set up our chart of accounts for property investing. So the next thing we're going to do is we're going to set up tracking categories. Right, so tracking categories are a really useful tool for property investment companies in Xero because they enable you to basically, for every single transaction, income or expense, tag it to a specific property. And that means that you can later on set up bespoke reports which show you the profit and loss of your different properties. It's really important, even though you might only have one property initially, do this from the off because it means it's going to be really easy to then scale as you get second properties. You can add a new tracking category for that. So just do it from day one. Gets you into the right practice to make it scalable. So what we're going to do then is click under accounting settings. We're going to click in tracking categories. I'm going to click add tracking category. And then the name of the tracking category we're going to use is property. And then we're going to add details of our properties in here. So we're going to add Station Road. And we're going to add Cliff Road. And then as we get more properties, we'll add them in here as well. But for the time, we've just got the two, so we're going to click Save. And that's all set up. So I'll show you more later as we come to process some of the transactions in Xero, how useful that is. So what we're going to do now is we're going to connect our bank account to Xero. So one of the best features about Xero and QuickBooks with the same is it basically enables transactions to come directly from your bank account into Xero so they can be processed in real time. So it kind of negates the requirement to do manual uploads of statements, which is really useful. So what we're going to do now is click securely connect a bank account. We're then going to search for whatever our bank is. So we'll say ours is Starling. And what will happen then is you'll basically be taken through a page. You'll click continue and log into bank. It's going to enable you to add in all your bank details. And that's going to mean that your account is then connected directly to your Xero account. So all your transactions will be automatically imported, which is going to save you a lot of time. So what we'll do is we'll just do that now, and then we'll go back and do the next steps. Okay, so once we've connected our bank account, then we're going to see that we're going to start to get transactions appear for us to reconcile from our homepage. Mine says get bank feeds, but obviously yours, you would have actually connected yours to a bank. I've manually imported a statement just to kind of replicate what it would look like. But yeah, that won't be there in your case. So what we can do now is we can start to reconcile transactions. So let's go on to this now. Okay, so there's a few different ways we can reconcile transactions. So the first one is just to kind of, if it's a kind of one-off expense, which we're not expecting to repeat, we can just literally click the details. So Happy Lettings is who we're paying it to. Click that, put it into the who, and for every transaction you need to create a new contact. So we're going to click new contact. Happy Lettings is now saved as a contact. We then need to choose what that transaction is for. So this is rent. So in this case, we're going to put rent receivable, and then we can put in details here of what it is. So we can literally just copy and paste that across. Station Road rent, copy across, and then click OK. What we'll see is that Xero is clever. It uses AI. Basically, it will find any kind of transactions which look similar to this. It will then kind of suggest that that is potentially what it is. And actually, you'll find as well, if there's more detail in the description, Xero is quite good now. It picks up potential transactions and gives it a recommended accounting code, so you can quickly process your transactions. What we're going to do though is, because things like rent, they're not really one-off occurrences, you're going to get, well, hopefully if your tenant's paying their rent, you'll get a monthly rent from your tenant or via letting agent, and that is basically a kind of it's going to be what we can do is we can set up a rule for that. So rather than having to make a new transaction each time, it basically automates it as much as possible. So it's just a case of quickly checking it and then clicking a button. So what we'll do is, for some of these transactions, they're actually not going to be one-off transactions. So let's set up some rules. So this one here, Bill Smith DLA. So this is director's loan account. So Bill is paid £25,000 into the bank account as part of the director's loan account. So that's something, if you're a director of a company, you're probably going to be making quite a series of these transactions. So it's actually easy to make a rule. Let's do that now. Create bank rule. Okay, so it's going to take you to this first stage, and this is basically the fields and conditions it looks to associate a transaction with a rule. So we're going to say that basically any payment from Bill Smith is going to probably have his name from the bank transfer, but rather than have equals, we're going to have it contains, because sometimes it might say Bill Smith and have some more information like remarks next to it. So just going to change that to it contains. We're going to delete the second one. We're now going to select which contact we want to associate that with. So that's going to be Bill Smith. I'm going to add him as a contact. And then we're going to basically then allocate line items. So I would just ignore this first box, and we're just going to use this second one. And we're going to put Bill Smith DLA, Director's Loan Account. Remember, we set up a Director's Loan Account accounting code earlier on. We're going to use Director's Loan Account Bill Smith. There's no particular property that's linked to, so we don't need to use that. But if some transactions are associated with a particular property, we need to make sure we fill that information in there. Before we click save, we're going to check the name of the rule. There's one Xero defaults to aren't usually that particularly helpful, so we're just going to add a bit more detail. So Bill Smith, DLA, Director's Loan Account, that's more helpful. It's just important to note though that this is a receive money rule, but we need to do one for spend money rule as well. So if we pay out money to Bill Smith, we're going to need to set up a separate rule for that as well. So what we'll do now is click save. What we'll see is that for any kind of times where Bill Smith's paid money into the company, it's now going to link it to that rule. So it's going to save us some time. So we're going to be able to just quickly click some of these to account for it. What we've got here is we can see that solicitors Station Road purchase. This is where you can see here we've paid money in. So that looks like a deposit to purchase a property. So if you look at the description, it says Station Road purchase, 24,500. That's kind of like a typical one-off transaction. So we're not going to buy Station Road property again. So there's no point in creating a rule for that. What we're going to do is just put the details across. So solicitors. We then need to know what accounting code, because it's a purchase of a property. It's a balance sheet transaction. So it's not an expense. It goes into the balance sheet. So it's something it basically is an asset that the company is purchasing, so it needs to go into the balance sheet. So we're going to use remember we set up a accounting code for this particular property. So Station Road Investment Property. And we can put some description in there. We can just copy and paste that across in this case. And then we're going to click OK. That's process that transaction. So you've got another DLA one here. So we'll click through those now because that rule is applicable. There's £25,000 there, £25,000 there. Here we've got a new one, so we can see we're starting to pay mortgage payments for Station Road now. So once you've got property, you're probably going to have routine every month a mortgage payment, which will be a similar amount. So let's set up a rule for that now. So again, we're going to go with conditions match. We're just going to keep it to 1. So yeah, the base of the bank is Paragon. You probably normally have like a reference number after that, so we can just switch that to contains. It'll probably say Paragon. It might have a reference number, which every transaction has in it there. We're going to use Paragon as the contact and create a new contact. Again, we use the second box. So it's Paragon Mortgage. It's for Station Road. So we've got an accounting code for mortgage interest, which we're going to use. And we're going to put in the relevant property here. So Station Road. This means that all of those mortgage payments are associated with the property Station Road, and that's going to be important later on down the line when we go to do customized profit and loss statements. Going to set the rule. So Paragon again, just move away from the default one that Xero gives and just give it a bit more detail. Station Road Mortgage, and we click save. See now that is now gone into the rule, and you'll see that any other similar transactions are going to be also associated with that rule, which is great. It's going to save us a lot of time. So keep going through. So we actually click some of these now. So Paragon Station Road Mortgage. So this is one. Remember earlier on we did we had a transaction that was similar to this, and we basically put the details in. It's now looking to copy that going forward, but we're going to again set up a rule. So we're going to click Create Bank Rule. Okay, again we're going to link it to Happy Lettings, and again it'll probably have a reference number after it, or it might even have the details of the property in the payment reference, which would be really useful. I'm going to put Happy Lettings as the contact. Use the second box. Happy Lettings, Rent, Station Road. We use rents receivable in this time, which we've got for all of our rents. We'll go into rents receivable. And again, we're going to link it to that property, Station Road. Add a bit more detail here. Station Road, rent. And then we're going to click save. See now there's a rule created for that. Again, that's going to save us time. So we can start clicking through these and selecting them where the rule, we just need to check that the rule is appropriate and it's picked it up correctly. But yeah, that works. These rules are all correct. And you can see how much time this is going to save us. It's gone from having to kind of manually do every single transaction to all of these ones basically being linked to a rule. So yeah, it's going to save us a lot of time, which is good. So we're happy with all these ones. We check them. Okay, this is now a different one. Okay, so here we got a payment to solicitors for £300. It's for Cliff Road. So here Xero has tried to link it to a previous transaction, which is actually incorrect. So that's why you just need to make sure you check transactions, make sure they're accurate. So this is wrong. So actually it's for Cliff Road. And you can see here it's a payment on account. So normally a solicitor will require you to make a few £100s to pay for things like searches while so they can get on doing some concurrent activity with the transaction. So any payment to solicitor for the purchase of property is a capital expense, and it has to go to the relevant balance sheet accounting code for that particular property. So this one is Cliff Road Investment Property. So it's not an expense which is deductible from your rental income. It's a capital expense, which means that it's basically linked to the value of your property. With this one, we can remember to link this to the particular property. I need to do that with all of our transactions. So this was for Cliff Road. Okay. This one we're going to come back to. I'm going to show you a different way you can kind of deal with a transaction like this, where you have like a one-off you probably have an invoice. I'm going to show you something I can do in Hubdoc, link a specific invoice to a transaction. It doesn't work with mortgage payments because you don't necessarily get a monthly invoice from the mortgage provider. You normally get like a statement on an annual basis. So, and it also isn't going to be applicable to rental income normally, because if you use a letting agent, basically what you'll have is you'll have a rental statement normally once a month, but it'll have basically how much rent you get and all the expenses you deduct off. Unfortunately, the Hubdoc, which is a linked software, which I'm going to show you shortly, it doesn't work for rental statements. Basically, there's a get around, which I'll show you later, about how you process those. But for the time being, we'll come back to this later. So Bob Builder, let's just leave that for now and come back to it. So yeah, this is Paragon. This is the rule we set up for the Station Road mortgage. And again, it's tried to link this to Station Road, but it's not Station Road. This is another purchase of property, this time for Cliff Road. So we need to just correct that. Cliff Road investment property. This is another deposit we paid for this time for Cliff Road. Link it to it. Always link it to a property on below and click OK. Yeah, that rule is working there. Good. Now we've got a new one, so we're going to have to. This is for rent for city lettings for Cliff Road. So let's create a new rule. Okay, so as before, then click that to contains city lettings, and it'll probably have a bit more information about the property particularly as well. I'm going to use city lettings as the contact. Rent for Cliff Road. Rents receivable. Link it to the property. And just add a bit more information here again. Then click Save. Okay, we've got a new one here. This is it looks to be a mortgage for Cliff Road. So let's set that now. Create bank rule. So this is from Kent Reliance. Click that to contains. Again, it'll probably have a bit more information. Put in the contact as Cliff Road. In the second line, then put information Cliff Road mortgage. Count is going to be mortgage interest. I'm going to put the property in here. And then we're going to click Save. So again, these rules are all working now. Great. So click OK for them. And we just got one more here. This looks to be Station Road. This is again a payment on account for solicitors. So yeah, this time it's put in the correct place. It's Station Road investment property, and for the purchase. Okay, so we've just got one more to process now. I'm just going to show you how you can process when you get an invoice from a contractor, for example, or from any of your providers. Really, you can use it in Hubdoc to basically put the invoice in there and link it to a specific transaction. So what we'll do now is we're just going to show you how you can connect your Xero to a Hubdoc account. Okay, we're going to click Sign in with Xero. Okay, so once we're in our Hubdoc page, it's going to look something a bit like this. There's a few different ways you can upload documents into Hubdoc. So one way is to click Upload Document. Lets you drag and drop the file into there. Another way is to go into Settings, Organization, and then it's basically, if you scroll down, it gives you like a default email address. It's quite long-winded, but you can basically copy that email address. If you forward any emails which have an invoice in them to this email address, it's basically going to pick it up as an invoice. So that's really handy. In this case, I was going to upload a manual invoice. So we're just going to drag and drop it in there, or just what I'll do now. Okay, so you can see it's picked it up. So what we can do is now we'll process that invoice in Hubdoc. So we'll click on it. The invoice has all the information in there. It should pick up most of it automatically. So it's picked up the supplier, it's Bob Builder. It's picked up the amount, which is good. The VAT rate, it's not exempt, it's no VAT in this case. And then you just need to then add some details in here. So we're going to add, it's for a purchase, status is awaiting payment. Sometimes it defaults to draft, but if you put awaiting payment, it's going to make it automatic to link it to an invoice, link it to a transaction. If it goes to draft or awaiting approval, you'll need to go into your bills on Xero and approve it before it can be associated with a transaction. So we're just going to click awaiting payment. We're going to add the details. Bob Builder. Great. I'm just going to select the relevant accounting codes, in this case, correct repairs and renewals. We can actually link it to a property as well. So you can see this is for Station Road. And then we're going to click publish. So what we can do now is we can flick back to Xero. Now if we refresh this page, you can see that it's automatically taken that invoice and linked it to this transaction. So we can click OK now. This is a really useful way because it basically means the invoice is all held within the cloud and linked directly to transactions. Okay, rather than you having to have some other way of storing your, ideally digital way of storing all your invoices. But like I say, it doesn't work with rental statements because it can't. It doesn't work when you've got like income and expenses in the same invoice. Unfortunately, it's no good for things like insurance or mortgage payments as well, because like I say, you get annual statements. It doesn't really work very well, but it does work well with things like builder invoices, for example. So we're going to click OK. So what we've done is now we've reconciled all the transactions. So you can see that actually by setting up rules, it actually speeds things up significantly. But also use Hubdoc as well for those kind of invoices we want to put into as well. Okay, so we're in a good place now. We've reconciled all the transactions, but there's just an issue we need to resolve now. It'd be easier if I go into the balance sheet to show you. So we click into reporting, balance sheet. Okay, we're going to click to today's date. What we can see is 2 property purchases have gone through, but clearly that's how much we've spent on them. So we've paid for the deposit, but that's not how much the property is worth. So the purchase price for that property hasn't been taken into consideration because it's only worked off the actual payment of the deposit. So what we're going to need to do is called a manual journal to account for the actual purchase of those 2 properties. Otherwise, the balance sheet, which shows what the company owns and what it owes, is going to be understated. So yes, that's something we're going to do now. Firstly, in order to do that, we're going to make sure our settings are correct to enable us to do that. So we click under accounting. You can see there's no option for us to do a manual journal initially. So what we're going to need to do is just amend our settings. So we're going to click under 123 property management, then under settings. We're going to click under users. We're going to click on change permissions. Okay, so we're going to need to click under advisor. It's going to give us all the information we need, all the settings, to be able to conduct manual journals. If you've got an accountant which helps you with this, it's maybe worth, and they work on Xero with you, have a discussion with them first, but yeah, we're assuming you need to be able to do this yourself rather than your accountant doing it for you. So we're going to click update permissions. Now, once we go back to accounting, obviously shortly it's going to refresh and we're going to have more ability to have more options under accounting. Yeah, so now we click under accounting. You can see we've got now more options, so we can click under manual journals. And what we're going to have to do is basically for every single property purchase, we're going to have to conduct a manual journal. And again, so if you have an accountant you work with, worth having to chat with them first. If they're kind of in Xero with you, then that can be easy because they might be able to help you with this. But if you're on your own, then this is your way you do it. So we're going to click on a new journal. And we're going to do Station Road first. So Station Road purchase. Key documents we're going to need to complete this. So firstly, then we're going to need a completion statement. Completion statement is a document which looks something a bit like this. It's basically provided by your solicitors. It basically looks like an invoice. It contains all the information of the purchase price and all of the associated purchase costs of the property. It's got details of the mortgage advance in there as well, and the amount of deposit you paid, including any payments on account. So this is going to be a required piece of information before we can process the property purchase. You're also going to need some information on your mortgage. So normally in a mortgage offer, you can have details about any. It'd be easier to explain this. See how we have a mortgage advance here, 60,980. That's going to be basically the net mortgage advance. So your mortgage, your bank will basically lend you money for the purchase of the property, but they don't give the solicitor the full amount. So normally there's like a fee associated with arranging the mortgage, which is part of the gross loan, but they only provide the net loan to the solicitor. So we need to make sure we take into consideration this. This information is normally in your mortgage offer. I've just kind of summarized it for both. I've summarized it for both properties in here. So there's normally like an arrangement fee and a telegraphic transfer fee. So yeah, you'll need to account for these as well, because they're not going to go into your. They won't be in your bank transactions, so they won't therefore go into your balance sheet. So what we're going to do then is, while we're on our manual journal, we're just going to open up another report as well. So we're going to click balance sheet. We're going to right click it and open a new tab. Okay, and click today's date. And we're going to do Station Road first. So we're going to click in. See, it's got blue writing here. It enables you to click into that accounting code. Okay, so make sure it's got all the information of your accounting period. Click update. Okay, it's got 2 transactions. They're actually in the wrong order. So actually you would have paid that first. So there'd be a payment account normally for money to enable the solicitor to start doing searches, and then there'd be a payment for the actual deposit itself. And if we just click back to the completion statement, we can see it refers to a payment on account for £300 and then a payment of just over £24,000. So that matches up with what's showing has come through into our bank details. A bit of a complication might be if you've paid for some of this from your personal account rather than your company account, but just to make things nice and simple, always just try to use your company bank account to pay for all of your company purchases. Going to keep things nice and simple. Okay, so we've checked those transactions are correct. What we're going to do now is start adding the details of the information into our manual journal. So the first thing is, and when was the date? So we check on the completion statement. Normally it'll give you a date of when the completion took place. We can see from here that it probably took place on the 1st of January 25, but normally the completion date will give you the actual date. So we're going to put the date in here. So put Station Road purchase, and we said it was on the 1st of January 25. Okay, we're going to need to copy that description. We'll put Station Road purchase as per completion statement. And just copy that down. So normally, it's only because I edit it afterwards, it's not done it automatically, but normally it'll just do that automatically for you. Right, and so these are the accounts and transactions we need to process. The first one is going to be, and we'll add the information in here for each of them. The first one going to be is purchase price less what we have paid for solicitor. Okay, so basically, yeah, we're going to look for what in the completion statement as to what we've paid for the property. So it's purchase price less what we've already paid. And the accounting code we're going to use for that is going to be the relevant investment property accounting code. Again, I'm going to use Station Road property, and what we'll do now is we'll go into the completion statement. Okay, so we can see here that the purchase of the property was £84,000. We're going to deduct from that what we've already spent on it, and it's actually in the completion statement, but we've cross-referenced that with what's in the relevant accounting code for that property purchase. Okay, so we're going to go with £84,000. We're going to deduct from that 24,584.96, and also £300 that we've already spent. If we don't do that, if we put in the full purchase price into here and don't account for those amounts we've already spent on the property purchase, then we're going to basically be double accounting for it. It's going to mean that the property the property value of the balance sheet is going to be overstated, which is suboptimal. So What we'll do now is put that information in here. Because this is, so I haven't really got time to go into the detail of kind of accounting and bookkeeping basics, but you basically have debits and credits in accounting. And basically, because this particular one is going to increase the value of an asset, it's counted as a debit. So we're going to add in that amount here. So it's the purchase price less what we've already spent on it. So the amount we paid as a deposit and the payment on account towards the solicitor. So it comes as 59,115.04 pence. Okay, the next one we're going to add then, I'm just going to add a little customized bit of information. We just want to make it as nice and clear, so when we come back to it, it's really clear what we did. So we're going to go here, we're going to add purchase costs, capital purchase costs, and again using the same accounting code. I hate it when Xero does this. It tries to put in an amount, because basically with journals, debits have to equal credits, and it tries to basically, it thinks the next one should equal that, but in this case it's wrong, because that isn't the correct amount. So we're going to again link it to Station Road. And for this one, go back to the completion statement. We're going to basically go through and just add up all of the different associated purchase costs. These are all capital purchase costs, so it's costs of paying the solicitor for their fees, things like searches, things like stamp duty, land tax. You can see it's added them up for us in the completion statement. But one piece of advice is I would always go through and just double check they're added up correctly, because I find quite frequently with solicitors' completion statements is that actually the information is wrong. They don't always add it up correctly for whatever reason. So in this case, I have already checked it, and I'm happy the information is correct, but yeah, always make sure yours is accurate. So I've just copied and pasted that directly from the completion statement and paste that in here. So that is all of the associated purchase costs, capital expenses, and basically they go to increase the value of the property on the balance sheet. They're not expenses which are deducted against rental income because of capital expenses. Okay, the next thing we need to do then is account for the mortgage which we use to purchase the property. So we can just add in details there. Net mortgage advance needs to be go under the relevant accounting code for the mortgage. So we added one before, Station Road, mortgage finance. Then we're going to check on the completion statement what that amount is and put it in here. And you can see, we know we've done it correctly because everything adds up. Basically, all debits should need to correspond with credits. In this case, they do. So we could click post there and we'd be 90% correct. But as mentioned before, we need to account for the fees which were added to the balance of the mortgage. This is pretty common when you take out a mortgage. You pay fees which are added to the value of the mortgage. So we need to account for those as well. So what we're going to do is we would refer now to the mortgage offer. I haven't got a mortgage offer for this one, but I've just put the information in here. You can see there's a telegraphic transfer fee and an arrangement fee. So it comes to a total of 1,520. And there'll be two parts to this. So there'll be put mortgage fees added to loan. There'll be two parts. There'll be one part will go to the mortgage, another one will go to finance charges. This is an accounting code for cost to arrange finance. Okay, so again, adding in Station Road to the property for both of these. Okay, so there's two parts to it. There's the finance charges, which this is an allowable expense. So it's 1,520. And then there's this amount was added to the value of the loan, so 1,520. This stage, writing this fits in for now, but whenever when you look at a mortgage arrangement fees, just speak to your accountant and just see how they should be applied to your accounts. In this, we've said that they're applied all to basically the year where you purchased the property, speak to your accountant. They may have a way of, actually, this might not be the correct way when it comes to your accounts, so make sure you just inform them of this transaction. Now I'm going to click Post. Okay, what we can do now is just to check that's worked. We can click on the balance sheet. So under Reporting, Balance Sheet, Day's Date, Update. You can see now, Station Road Investment Property, it comes as 87,864.96 pence. So that's basically the amount. Oh yeah, we're clicking it actually. Yeah, so it's basically, it includes the payment on account to solicitor, the deposit we paid, and then it's the manual journals in here as well. So it's got all the purchase costs and things like stamp duty, and everything from the journal we just made. And so that means the amount is now correct. If we just go back, we'll also see we've got now a mortgage amount as a liability as well. So you can see now that our for this property it's correct. And what we can do now is we'll do the same for Cliff Road. So just to keep things nice and simple, I've used the same mortgage statement as essentially. So we'll just do it again, just so you can kind of see me do it. It gives you another example of how to process it. So this time I'm going to click under Cliff Road Investment Property. Then we're going to click under Accounting, Manual Journals, right click in New tab. I'm going to click New Journal. And let's do this for Cliff Road Purchase as per completion statement. Coming back to Cliff Road, we can see we completed that on the 12th of July. Your completion statement will tell you the date though, assuming it has one on there. 12th of July 25. I'm going to go through the same. So we've got our completion statement. Again, it's exactly the same as the last one, just to keep things nice and simple. But we'll first just copy down the first one in here. So Cliff Road Purchase as per completion statement. Again, it's going to be purchase price less what we have paid solicitor. All right, for this one, I'm going to use Cliff Road Investment Property to make sure we have Cliff Road in here. Let's go back to the completion statement. Same sum before, so we've basically the purchase price 84,000. Deduct from that what we've already spent. We can track that in the relevant accounting code. So you can see that the two amounts total up then. So 84,000 minus 24,884.96 pence comes to 59,115.04 pence. So let's go back to the manual journal. It's a debit because it's increasing the value of the asset. 59,115.04 pence. The next thing we're going to add is the purchase costs. I'll call them capital purchase costs. Again, to the same accounting code, 702. No, it's going to try and default to put something in there, which is wrong. Take that out. Cliff Road. Again, go back to our completion statement. Make sure we add everything up with a calculator to make sure it's accurate. We can see they come to 3,864.96 pence. We'll just copy that directly. Go back to the journal and add that in, again under a debit because it's increasing the value of the asset. Then we're going to add details of our net mortgage advance. Net mortgage advance. So when we set up a mortgage accounting code, let's try to put a number in there. We're going to take that out. Cliff Road, go back to the completion statement. See that the mortgage advance was 62,980. Copy that. Again, this is a liability this time, so it goes in as a credit. And again, the last thing we need to do is just check our mortgage offer to make sure we've got details of the purchase, of any fees which were added to the mortgage, which won't show in the completion statement. So for Cliff Road, I basically said they were the same, so it's 1,520. So we can add these in here. mortgage fees added to loan. We need to make 2 for that. We'll have one as finance charge, and then one as Cliff Road mortgage finance. Again, add Cliff Road in here. Right, so there's 2 parts to it. There's the finance charge, which is an expense, which goes as a debit, so that's 1,520. And then there's the part which is added to the loan, 1,520. And then we can click OK. As discussed before, speak to your accountant about how these should be applied to your accounts. With regard to finance charges, it might be appropriate to apply them all in the first year. Say, for example, a 5-year fix, but you speak to your accountant about that. Now click Post. So what I'm doing now is go on to Reporting, Balance Sheet, click on today's date. You can see now both properties in this case are the same value. You've got your both your mortgages on there, which is great. So we're in a pretty good place. There's one thing that's quite often forgotten about is you're basically going to have a transaction which is for your share capital. So what we'll do now is we'll just click under, I'll show you how to add share capital into Xero, because it won't come in automatically. It's something you need to add via manual journal. If your accountant uses Xero, they can do this for you. But again, if we know how to do it ourselves, we can do that too. Click onto manual journals. We're going to click new journal. So going back to the scenario then, we said there was £10 of share capital and the company was formed on the 31st of December 2024. In your case, if you've got, if you're in the UK, you can go into Company's House, look into your company's page on Company's House, go into filing, and it'll have details of a share capital that was introduced when you set up the company. But yeah, we can do it here because we know it. So in our case, we know that Bill Smith's got basically £10 of ordinary shares. So share capital on formation of company. The date it was formed was 31st of December 24. Yeah, and account, you'll have share capital. A couple of ways you can do it. We can either use a director's loan or we can use other debtors as well. But in this case, we can use director's loan. Ask your accountant as to which it should be applied to. So share capital, then it always goes as a credit, and then director's loan, £10. Click Post. Now I'm going to click under Reporting, Balance Sheet. Click on today's date. You can see now there's a balance in your share capital, which is good. And we can see now that, yeah, we've got the share capital in there, which is something people quite often forget when they set up Xero. Okay, so we're in a pretty good place. We've got our properties have been put into Xero, and we've set up our bank account. So all of our new transactions are going to go through there. We've processed 2 property purchases and two mortgages to buy those properties. Hope you found this video useful. If so, watch out for part 2, in which we're going to go into more detail so you can see the profitability of your different properties, as well as some of the end of year accounting action you need to conduct, such as revaluing your properties. In the meantime, if you need any further assistance, got some details in the description about how you can become an accounting and bookkeeper customer or sign up to my community for property investors using Xero. Meanwhile, for more further content, please remember to like and subscribe.